Hey there everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. So our market gave up a little bit today, guys, pulling back to hold that previous resistance as support at this stage. Now, the fact that we've held this level, and if that level continues to hold, is actually just a strengthening of this overall trend here, guys, okay? So what I'm suspecting at this stage of things is probably a bit more sideways movement through this support level, and then eventually we'll kick a bit higher. The momentum in this trend is really softening, okay? Every move up to new levels that we get, when I say new levels, they're obviously not all-time high levels, but new levels that we haven't seen since last year. As we kick up further and further and further, that momentum is just slower and slower and slower at this stage. So really at this point, we need a new catalyst, right? What got us up here so far is, promises of recovery, vaccines, stimulus, infrastructure spending, new president in the US, all that sort of stuff, right? But now, a lot of that's starting to become baked in, and I'm not saying that the market's at its top yet. It's not. I don't think it's anywhere near its top yet, to be honest. I still think we're after a fairly bullish year. But you're starting to see the movement slow. Like, we had a phenomenal move here, okay? From the end of the election to where we are right now, that's a fairly big move, right? So, we pushed up about 14% in a very short period of time. So there's no surprise that the next sort of moves up could be quite slower unless we get another catalyst, unless we get more stimulus passed or some other good news from somewhere to really get people back on the buying and frantically buying. Look, as long as we hold trend, as long as we hold this level, I still feel there's plenty of upside. Obviously, there's a lot of articles around saying the market's overheated. Yes, some stocks are overdone and way above valuations that they should be at. There's no denying that. But in this sort of day and age of very, very low interest rates and a ton of stimulus being thrown around, I don't think that bubble's going to burst yet, right? I think we're way off. We're way off. I think there's still plenty of upside in the US market and in our market. So let's go have a look. S&P 500 trending, okay, solid, slow, steady trend now. We had that nice boost up after the election, and now it's just on that path up higher. It's a nice trend line, guys. It's much nicer than the way ours looks on our market. And at this point of time, it just seems that it's just going to slowly continue. These movements are normal. You get a push up and a little bit of volatility sideways, and it just pushes up. So, the way I'm looking at this at the moment is I'm not looking for these types of movements, right? I'm just looking for a slow and steady push higher over the next few months, okay? So that's probably the way to look at it. Don't get too caught up in the day-to-day movement. Unless that trend breaks, unless you start seeing lower peaks and lower troughs, then we talk differently, right? But as long as we still see these higher peaks, higher troughs, at this point, just ride the trend higher. It's a slow and steady trend. It's just got to time your entries. So we're in the middle of a reporting season in the US at the moment. So far, the earnings have been quite strong, right? I say strong compared to expectations. Obviously, a lot of those expectations have been pushed lower because of COVID, okay? But the fact that we're beating those expectations is always positive for markets, okay? So it doesn't matter how you spin that, right? The market loves it, and the market's going up on the back of that. Well, what I'm seeing this reporting season quite a bit, though, is stocks are rising into their reports and then perhaps pulling back a little bit, even though they've had a good report. So a lot of it's baked in by the time the report actually happens. And that's because we saw a lot of strong reporting early in the piece. So a lot of the tech stocks have been rallying in and then pulling back a little bit afterwards. But tonight, look, the big thing for us at the moment, or for this week, is the US Fed. Okay, the market hangs on to every word. What we're looking for is a continued dovish stance. We want them to stay very accommodative. We want to keep interest rates low. We want to know that they're going to keep balance sheet spending up and continue to keep credit markets healthy. And I don't think that dynamic's going to change yet. I think that we're a ways off any of that sort of changing at all. Okay, they're going to keep pushing their dollar lower. They're going to keep doing what they're doing, right? Spending, stimulus, low interest rates. So none of that's going to change. I can't see anything changing on the back of this. They have targeted higher inflation. They want to keep inflation high for a period of time. So that's what you want to look for. You want to look for CPI. When that hits 2.5%, they're going to keep it there for a while, is what they're saying, and then reevaluate. So I can't see a top of this, right? I can't see any of this changing unless we get rapid inflation. So that's what you got to keep an eye on. That's what they've promised us so far. Okay, stimulus, right? So Biden's in now. Biden's going to be pushing for stimulus. We want more stimulus news. Locally, look, don't expect more than what was already announced in the budget for the time being. Let's see what they announce in the next budget. But one would expect, as what everyone expects at this stage is, keepers and seekers is going to continue to taper off to nothing. Our recovery is actually looking pretty strong at this stage, guys. Okay, jobs are looking strong. I think there was numbers out saying about 90% of the jobs lost through COVID are back, right? So 90% of people that lost their jobs because of COVID are working again. Right, so that's big, right? That sort of shows, even though we locked down and we went into harsh lockdowns and tourism's been affected, there's still work out there for people, okay? Where we don't have overseas students coming in, that's opened up a massive gap where people are looking for employees, especially in restaurants and things like that, right? So there's work out there. That's the thing. It might not be as well paid work as it was before, but there's still work, and that's what the government's going to be looking at, right? Whether you think it's right or wrong. Don't expect a lot more COVID stimulus to come in through direct payments to people and that sort of thing. It's just not what the Liberals do, guys. Okay. So at this point we expect more infrastructure spending. We expect more focus on that side of things, trying to promote companies to spend money, employ more people. That's what the current government's going to be pushing for. So once again, I still like things like material stocks and industrials and those types of companies that are going to do well out of massive infrastructure spending to come. So vaccine rollouts continue. Look, obviously it's going to be a little bit slow going here to begin with, but you know what? We've got a bit of an elimination strategy happening right now. What the vaccines really mean for the Aussie market, I believe, is the travel stocks, right? As you start to see, policies brought out on people traveling back into Australia if they're vaccinated, if they start talking that type of talk, then stocks like Qantas and that could start really performing well. So vaccine rollout, there's certain stocks that it's really going to help. So just keep an eye out on that. I think we're still a way off on a reaction in the market on that side of things. Like a lot of travel stocks are off today anyway. So it's not playing out yet, but it's just something to keep an eye out in the near term. A lot of those travel stocks have been beaten back down. They're going to have their moment, right? So just keep an eye on that space, especially as we roll out more and more vaccines here in Australia. But yeah, look, it's a bit of an odd day. We're seeing a little bit of a pullback in the market, a bit of profit taking, a bit of risk off coming into the Fed announcement tonight. But I think that's going to be short-lived. I really do think we'll see a rebound in this market pretty quickly and we'll continue to edge higher. All right, that's enough from me. Thanks for listening in and bye for now.